Visiting celebrity in the audience. We will ask Lynn if she will lead us in a Pledge of Allegiance. We're extending a hand of friendship to Wasilla, okay?
Allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
You know, Wasilla uses the same words.
The first item on our agenda is the approval of the agenda. What is the council's wishes?
Move to approve.
Okay. Okay, it's been moved and seconded that we approve the agenda. Is there any amendments or questions or comments? All those in favor of the approval of the agenda, please say yes.
Yes.
Yes. Yes. Oh, 5 minutes if you're representing the group. Audience participation is now open. Seeing no one come forth, audience participation is now closed. The first item on our agenda is new business. And if I can have a motion for us to go into a committee on the whole, please?
Madam Mayor,
Yes.
I moved that we move to, Committee of the Whole.
Okay. And there's second, right? Okay. Discussion amendments regarding going into the committee on the whole? All those in favor of the council going into the committee on the whole, please say yes.
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 Those opposed say no. The yeses have it, and we are now in the committee of the whole. And so do we want the presentation first, or do you have questions first? Okay, I guess we're, okay. Can we turn off some noise sounds behind us, please? Thank you. Okay. Did you want me to go back over anything? Okay, all right, thank you. Ready? So we have a presentation. How do you want to do it, sir? Have Gina and the auditor come forth? Okay. Oh, Gina's not gonna come. Okay.
Madam Mayor, members of the council, this is Leah Patton with BDO, our auditing firm, to give tonight's presentation on the audit.
Okay, thank you.
Thank you.
Madam Mayor, members of the council, thank you. I'm happy to be here tonight with you, representing BDO USA. We're the audit firm that was engaged to perform the audit of your financial statements as well as your federal and state single audit reports. Just want to extend our gratitude for the many years you've allowed us to serve the city. And also want to extend a personal thank you to Gina Davis and her finance team. Certainly, finance was very prepared this year, friendly, helpful, responsive to all of our questions and requests, and their preparedness and hard work really makes our lives and our job a lot easier. So there should be two documents in front of you, the audit wrap-up document and then the financial statements. And I would like to go over the audit wrap-up document first. The audit wrap-up document is our formal communication to those charged with governance, the council members, and it's our way of communicating with you if there had been any difficulties performing the audit, if there have been any significant changes to your accounting policies, if the books and records hadn't been closed, we had significant amount of journal entries, if there'd been disagreement with management, just anything during the audit process that we feel needs to be communicated to you, this is how we would do it. Now, the financial statements obviously reflect your operations and provide you some year-end fiscal numbers that we audit and give you an opinion on. But if we had any difficulties performing the engagement, it wouldn't be reflected in your financial statements. So this audit wrap-up document provides that. Now, it's a standard kind of templated letter for those of you on the council from prior years. You've seen it before. And I can kind of go over the high-level summary for you, and certainly feel free to read it. And if you have any further questions, I'm available. So on page 3, we will walk through the results of our audit, the status of our audit. And as you can see that we have completed your financial statement and federal single audit reports. The objective of the audit was to obtain reasonable, not absolute assurance about whether the financial statements are free from material misstatements, whether due to error or fraud. The scope of our engagement, when we come out into the field, we perform risk assessments, we gain an understanding of what happened during the fiscal year, and we do what we call our audit planning. So we just develop a plan. We kind of communicate that with management so everyone's on the same page and there's transparency about the audit process. Fortunately, there were no changes from what we thought we needed to do and how we planned the engagement. We didn't run across any hiccups. We didn't have any significant journal entries. The things that were provided to us by management and shared with the auditors were a true reflection of what happened during the fiscal year. So we didn't have to really change our audit procedures or what we planned to do. Now, if we had to do that, we would have to communicate that to you here. But again, no changes to the scope of the work that we performed. We have issued what we call an unmodified opinion over your financial statements, your federal single audit, and your state single audit. An unmodified opinion is the highest level of assurance that auditors can provide. It's what we call a cleanup. And then, of course, our responsibility is for the opinion themselves. The financial statements are the responsibility of management, and we'll walk through that opinion when we go through the financial statements. And again, we had full cooperation from your finance team. The books and records were available to us. When we asked for items, they were readily available. As far as on page 4, the results of our audit, accounting policies, practices, estimate, and significant unusual transactions, there were none to report to you. As far as any changes in your significant accounting policies, there were no new adoptions of GASBs that happened. And then we do have a long list of new accounting policies that have just recently been released and that the city will need to review and reflect on whether they need to be adopted for 2018, 2019, and 2020. And then you do have some significant estimates in your financial statements. These are essentially the same significant estimates that you've seen in prior years, but it's related to the collectability of the outstanding accounts receivables, the net pension liability, and any contingencies related to your operations. Any questions so far? Okay. Now, we did have some corrected misstatements. These are what we call audit entries. So the books and records are closed. We come in the field and we might find some errors. There were 8 audit adjusting entries. The only one that we would say is a material journal entry was related to the interfund transfer. It did result on us having to write up a material weakness over financial reporting, and I'll cover that in just a couple of pages. Other than that, the other adjustments were adjusting entries, so that past adjustments that we don't have reflected in your financial statements. Again, this did not impact the opinion that we issued. It's still an unmodified opinion because these numbers are not material to your financial statements. Okay? And then as far as the quality of financial reporting, we'll go over that when we go over the footnotes and the financial statements here shortly. As I mentioned earlier, we did have one finding. So on page 6, you'll see the internal control over financial reporting. So the finding is not related to the number being wrong. The finding is not related to any non-compliance. This is strictly about internal controls. Internal controls are your processes that you have in place to ensure that your employees, over the course of their normal duties, will correct any errors, any material errors. Now, this particular one was related to interfund loan, the water sewer fund. It's about $1 million. The transaction was recorded as a transfer rather than an advance. And so when we look through all the documents, we realized, okay, this was originally booked as a transfer. I mean, because the money did move from one location to another. It makes sense. It would be a transfer. However, when we looked at the underlying documents, we realized the substance behind it should really have been recorded as an advance. So it just moved from one spot on your financial statements to another spot. So instead of running through your revenue and expense statement, it should have really just been essentially a loan and run through your statement of net position or your balance sheet. And so it was $1 million. That's why it warranted a material weakness. It is a very large number. Unfortunately, it was material to your financial statements. But at the end of the day, the finding itself, just kind of keep in mind, while it is $1 million, it really didn't impact significantly the day-to-day operations of the city. It wouldn't have resulted in your decisions being made differently. Certainly, once we looked at the council meeting minutes, we realized, this really should have been reported as an advance as opposed to a transfer. And so that's kind of the story behind that internal control finding. Any questions so far?
On that, then that means that is repayable. Is that correct? Yes.
Yeah, it's just an advance. It's not a transfer.
Right. Good.
That's how we understood it.
Yeah, yes.
Madam Mayor, quick question.
Mike, please.
Thank you, Madam Mayor. You mentioned that there were some accounting principles, some new ones. Could you just very briefly identify what they are, maybe at the end?
Yes, so actually they're in your footnotes on the financial statements. So as I go through them, I will talk about them because some of them I think will have a significant impact to the city's financial statements. So I'll go over those here shortly, if that's okay.
Thank you.
Okay. And then as far as page 7, it's just other required communications. Again, if we had any disagreements with managements, difficulties, this is where it would land, and you can just go through the bullet points, but there was nothing. So I've kind of summarized that for you. Independence communications, we've maintained our independence throughout the engagement. And then finally, we've got some of these new rules that we were talking about earlier, the significant accounting and reporting matters. These are disclosed here and in the footnotes. And what we've done is kind of broken it out by when the effective years are going to occur. So the ones that are going to be effective for fiscal year 2018, GASB number 75, the accounting and financial reporting for post-employment benefits other than pensions. This is the OPEB, or the health and welfare piece of the pension liability. The pension liability was GASB 68. That has already been adopted. That liability is sitting on your statement of net position. 2018, we're going to bring on the health insurance. And so that's going to get recorded as a liability as well. And then GASB number 86, certain debt extinguishments. If you have that occur in 2018, just remember there's a new accounting rule, and so that'll have to be analyzed. And then 2019 and 2020, there's some additional rules that are coming into play. So 2019, you've got certain asset retirement obligations, and so if you were to retire one of your utility plants or anything like that, there are some new rules associated with it. Fiduciary activities, a new definition of what a fiduciary activity is, that will need to be analyzed to ensure that the city is in compliance with the accounting rules. And then certain disclosures on page 11 related to debt, including debt borrowings and debt direct placements for the bonds. And so new disclosures, unfortunately, for long-term debt. So that will require your finance team to kind of analyze and figure out what those new disclosures will be related to the city. And then as far as accounting and reporting for majority equity interests, the city doesn't have that right now, but certainly if something were like to come up, 2019 is the new, is when the rule would go into effect. And then there's a draft exposure out there related to accounting for interest costs during a period of construction, whether the rules might change on when and how you can capitalize costs, interest costs related to construction in progress or anything along those lines. And so just kind of keep your eye out for that. And then finally, 2020 is the new biggie. It's called leases. And similar to what the Financial Accounting Standards Board has passed for nonprofits and for for-profit entities, whereas in the past you had the option of 2 different kinds of capital leases. One was capital, and those would get capitalized and put on your balance sheet. And then what we called operating leases, and those would not get capitalized. You would just pay along the terms of the lease, but they were not reflected in your financial statements other than the payments. That is going away. Now you'll have to analyze all of your lease agreements to see if it meets the definitions outlined under the new rules. And essentially, if the term is longer than 1 year, more than likely it will need to be capitalized. So that's a significant change. So if you have a lot of operating leases that you don't have on your balance sheet, it might potentially need to coming onto your balance sheet. But that happens in 2020, so just wanted to give you fair warning, though. I think it's going to be very complex.
And on those, is that leases where we own the property and we lease to someone else? Or is it the situation where we're the lease, we are the leasee,
It'll go both ways.
both ways?
Yes. So if you're the leaseor, the rules
It'll
have changed, you'll have to analyze that, and if you're the leasee, then the rules have
we'll
changed, you'll have to
that
analyze
too.
it. Yep.
Okay. So, to me, the one big thing would be the airport on all of those leases. So, at what point will we, or do you address that in the financial statements, or you don't because it's not till 2020?
We wouldn't do it right now because you don't have to adopt the new rules until 2020.
Right.
But because of the complexity, and because many cities are in a similar situation as yourself,
Right,
better to kind of go through your lease agreements now and start that analysis. In
okay,
addition to which, some of your leases might be coming due, and now would be a good time to look at the terms and see if you want to change or amend it in such a way that either meets or does not meet the new accounting rules.
okay. And some, on the other side, besides the airport, on the other side of the coin, we have leases, you know, with the railroad for their property. Will they be covered by this GASB Statement 87 also?
Potentially, yes. So
Okay.
you really do need to look at all of your leasing relationships, whether you're a lessor or a lessee, and analyze that. Because depending on the terms of that lease, this could come into play for you.
Right, okay. Okay. Go ahead.
Madam Mayor, what terms would implement the GASB, potential GASB 87, and what terms of leases wouldn't implement that?
So just from a broad perspective, month-to-month leases or leases that are less than 1 year might potentially, depending on the other terms, but that would be one of the biggest triggers as far as the time of the terms. So the month-to-month and less than 1 year, you don't need to capitalize. It doesn't make sense to capitalize something you're going to take off the books in less than 6 months. So, but you also have to be careful, because this has come up as far as the question goes of, okay, so we don't have to do less than 1 year or month to month. So we've had some clients say, okay, well, how about if we structure it so that it's a 1 year lease, but we're going to keep renewing it year after year after year. And that kind of gets away from what this
The
is
intent
trying to
was.
do, is really
Yeah.
show a true picture of all of your commitments. And so so please don't do that. Because we'll have to call you out on it, and we'll have to go back and really analyze whether it needs to be capitalized or not. So that relationship with your other partner really is going to, we're going to look at not only just like how is it structured substance, but what is the true picture behind it? What are you trying to achieve to kind of get to whether or not it needs to be capitalized?
So just to follow up a little bit more on that, so this is the way government's gonna look at it. How is private, is there something similar
Yes.
in that private industries
Yes.
are gonna go through the same thing, right?
They were the first ones to pass it.
Okay, so
Yeah.
they've already implemented it
They
then?
have not implemented it.
Okay.
This is a very large change. It's
Yeah,
very significant.
right.
Very similar to how the governments kind of went through GASB 68. That was a very significant change.
Mm-hmm.
Leases are because think about it, the airline industry, for instance, is a great example. A lot of their leases are not on the books, but now because of this and the way it's structured, it is coming on the books. And so then they had to think about, current ratios and all the other things that go into what banks and other lenders look at as far as the health of an organization. All of a sudden, your liabilities have gone way up. And then, think about it, your capital leases are going to be a long-term asset, but that lease liability is a current portion and a long-term portion. So it really does change that current ratio. It doesn't change it proportionately. It's not a 1-to-1. It does skew it a little bit. And so that had a significant impact to a lot of the for-profit world. And so there was a lot of pushback and, back and forth. So they were the first ones to say, hey, we need to do this. But I think their timeline is very similar to yours in that it's either 2019 or 2020 for the for-profits. But the delay, I mean, they were the first ones to come out with it, but it just took a lot of time because everyone had a reason for fighting it.
So it's gonna be similar to what you have now, where you have current liabilities and long-term liabilities.
Yes. So for the city, for some of those leasing relationships, you're going to record a long-term asset, right? Because you have use of that asset, and that's why we're recording it. And then you're going to record a liability, and then there's going to be a current portion and a long-term portion to that liability.
Okay, yeah, sure, go ahead, sir.
Thank you, Madam Mayor. So if you're capitalizing the leases, I don't know how the balance comes out with the liabilities and whether it just balances out on the balance sheet. But in your experience, has the increased valuation of a local government based upon capitalization of leases, has that impacted any federal fundings or characterization as a rural community for various funds, state or federal? And if you don't know the answer, that's fine too.
So the rule hasn't come into play, so we won't know for a couple of more years. Those are some of the comments that came out with the exposure draft. So when the GASB says, hey, we're going to change some of these accounting rules, what they do is they'll send it out to all the people who are going to be impacted, and it's what we call an exposure draft, and everyone reads it and comments on it. But those were some of the comments that were made. There's no answer to it at this time.
Okay. Any further questions or comments from the council before we proceed? Okay, all right.
And then just a couple more pages here. The last page is page 13. It's the cybersecurity. I know that we've all read the paper. We all know what's happened across not just municipal governments. I would say across, I was actually talking to Gina about it earlier, across some of the nonprofits as well as the for-profit entity. Cybersecurity is becoming a real, unfortunately, heartburn for a lot of organizations. You all know about Trojan malwares, and all the social hijacking that they've been doing. I actually was sharing a story recently where a client had to essentially pay with Bitcoins to get their network back online. It was being held for ransom. Now it's covered by insurance, so you should really look at your insurance policy. Luckily, the city or the organization was covered by insurance, but it's happening more and more. Now, not all of the stories make the paper. So I would just caution you, and certainly BDO has a group that deals with cybersecurity, but I would just caution you, you have IT professionals, just to make sure that you've taken the necessary steps to ensure that your network and your accounting software and all of your personal information as far as employment records and things like that are being held with the highest security.
Madam Mayor?
Yes, Councilman Carrington.
I was noticing on the page 13 we have some recommended resources, but I didn't see this little document in the online, and so it's underlined, so I'm wondering if there's links that, in case we want to do some rereading.
So on the PDF, there are
Okay.
it's a blue link, and you can click on it, it'll take you to the online source.
All right. So I guess I don't have that PDF yet then. Okay.
Okay, all right.
And certainly, I can share it with Gina if you would like, and certainly not just for the city of Palmer. I mean, I'm sure you as council members or business owners, this is a cautionary tale, I think, for all of us, not just the city of Palmer or municipal governments. It really impacts everyone across the board, and certainly is a key point for all of the boards that I've sat through the board meetings, whether it's a for-profit entity or a nonprofit entity or a municipal government.
All right, so I guess we're ready to proceed.
Yes, and then finally, the management representation letter is attached for your review. As I mentioned earlier, BDO is responsible for the audit opinion, management is responsible for the financial statements. And so at the end of each engagement, we do ask that your finance department, as well as the city manager, sign taking responsibility for the financial statements. That letter is attached. It essentially says, we take responsibility for the financial statements. We provided all the books and records. We're not aware of any fraud, and so on and so on. Yeah. And that's it for the audit record document, unless anyone had any questions.
Any questions, council, the council? No, I guess you can continue, ma'am.
Thank you. All right, so the financial statements, and I'll try and make this a little bit quicker. I forgot my reading glasses, so I'm just going a little bit, I apologize. But as I mentioned earlier, the audit opinion is what we are responsible for. So on pages 1 through 3, you'll see our independent auditor's report. And it just lines out for you what we're reporting on, what management is responsible for, what we are responsible for. Our audit opinion, which is the unmodified clean opinion that we issued, is on the top of page 2. We also have some other matters related to the required supplementary information, the supplementary information, and then because you are subject to federal and state single audit, what we have to do is issue a report under government auditing standards. So we performed our audit not only using generally accepted auditing standards, we also use government auditing standards, which are a little bit more stringent, and issued a separate report related to government auditing standards. Again, all of your reports related to financial reporting, government auditing standards, the federal single audit, and the state single audit were all clean, unmodified opinions. Okay? So the next piece of the report is the management's discussion and analysis, called an MD&A. Now, this is your finance department's opportunity to kind of share with you the story of what happened during the year. So a lot of the numbers that are here are what's in the financial statements. However, there's some context behind it as far as why something increased, why something decreased, if there's been any changes in your funds, if you've created any new funds, if you've issued new debt, things like that. So certainly very important information for council members to read and understand. But in the interest of time, I can kind of incorporate a lot of that information as I do the presentation. So on page 20 is your statement of net position. Now, the statement of net position is also what we call a balance sheet. It's a picture in time. So at December 31st, these were your assets, your liabilities, and your equity position. So the city had just over $113 million in total assets across both your governmental and business type activities. Approximately $103 million consisted of land, construction in progress, capital assets, less depreciation, and then just over $6.5 million in cash and investments. The city had liabilities of approximately $16 million, $13.9 million in bonds and loans payable, and the net pension liability. Of that $13.9 million, the $7 million is the net pension liability. Now, this liability doesn't represent an amount the city is scheduled to pay back at a particular time. Unlike your debt, which has an amortization period, you have to pay it back over 5 years, the net pension liability is just a long-term liability, and it's there. It does not change what you, the city, contributes. It's still the PERS 22% of current payroll. Actual cash flow out for the city will stay the same, and it's, the relationship is related to your covered payroll, and this is the same as in years past. Now, this is subject to change if the legislature would go in and make some changes, but as of right now, it is 22%. And then finally, the city had $96 million in total net pension. $617,000 is considered unrestricted, so there's no outside restrictions. On page 21, this is your revenues, your statement of activity. So these are your revenues and your expenditures. So the overall change in net position in FY17 was a positive increase of approximately $7.3 million. Under general revenues, property tax revenue was $1.3 million. This is an increase from the prior year of $1.2 million. Sales tax revenue was approximately $7 million. This also was an increase from the prior year. The prior year was $6.5 million. The capital grant revenue was $9.6 million. compared to the prior year of $3.7 million. This is an increase of about 5.9. And then the operating grant revenues was approximately $275,000. This is relatively insignificant change. Last year was about $316,000. The charges for services was approximately $6.8 million. It was $7.2 million in FY16. And then grants and entitlements not restricted to a particular purpose stayed about the same. Last year was $403,000. This year was about $374,000. And your expenditures, $18.3 million, decreased by $1.2 million from prior year. The prior year number was $19.5 million. That's your statement of activities. And then we can pop right into the general fund on page 22 and 23. So page 22 is the governmental fund balance sheets. These are on a modified accrual, so it does not include your long-term liabilities, such as the debt or your net pension liability, and it doesn't include your capital assets. So this is current resources and current expenditures. So the balance sheet there, the general fund had unassigned fund balance of about $3.9 million at the end of 12/31/2017. This is fund balance that has not been externally or the assembly had imposed any restrictions on use. So, and the unassigned fund balance did decrease by approximately $533,000 from the prior year. Primarily, this was due to the advances to other funds. Okay. And then page 23 is just the conversion. Once again, we take the modified accrual, do the conversion to get to the statement of net position that we covered earlier. Page 24 is your statement of revenues, expenditures, and changes in fund balance. The general fund revenues exceeded expenditures by approximately $396,000. That's the change in fund balance at the bottom of the page. And the transfers out of the general fund totaled $949,000. And if you needed a detail of what those transfers were made up of, we have a detailed footnote on page 41. And we can go over that here shortly. And then we've got the conversion sheets that takes your modified accrual financial statements to full accrual. But on page 26, this is your business type activities, your proprietary funds. And so these are your, the major funds for the proprietary activities was the water and sewer, airport, and the golf course. So under governmental accounting rules, we go through a process where if it meets a certain metric, we consider it a major fund. And so these were your three major funds. Now, I will say, just from a business perspective, we do look at these and look at the health of some of these funds from a business perspective. Obviously, you're running some of these as a business type entity, so we kind of look at the current ratios related to that. And a current ratio is just a comparison of your current liabilities and current assets. And as I said earlier, the balance sheet is really a picture in time. So at December 31st, we look at, do you have enough current assets to pay off your current liabilities? And there were a few, two of your funds that are upside, what we call upside down, which means that your current liabilities do exceed your current assets. Now, on page 28 and 29, this is the statement of revenues, expenses, and changes in net position. One of the things that we also look at, because this is a business type activity, is approximately $34,000. And then, of course, the other non-major funds are generating a profit of approximately $199,000. Now, from a business perspective, for business enterprises, I do believe the cash flow statement is something that is very important. Businesses don't stay in business very long if they can't cash flow positively. So if you look at page 29 and look at your statement of cash flows, really the only two funds that are not generating a positive cash flow is obviously the airport and the golf course, and that explains why you're upside down on your current ratio, but certainly something the city is aware of. Any questions about the proprietary funds at all? Nope. Okay. So the rest of the footnotes, rest of the financial statements are the footnotes. The footnotes are very important to financial statements. Whether you're looking at the city's financial statements or any other financial statement, or even a business that you're purchasing, or stocks that you might be buying, I always recommend looking at the footnotes. The footnotes provide you a lot of information and detail. So if you go through these footnotes, number one, the first footnote talks about your significant accounting policies. Now, as I mentioned earlier, nothing has changed. So these are the same accounting policies that you've had in the past. But the other footnote I think would be of interest to the City Council is going to be your cash footnote. And that starts on page 37, and it goes on for a couple of pages. But your cash footnote's important just because it gives you a sense of if there's any risk associated with your cash and investments. So it details out your investment policy. It talks about interest rate risk, and also will give you a detail of what you're invested in. Now, the city has a very conservative portfolio. Most of your investments are in certificates of deposits. You're not invested in any weird fixed options or equities or any type of other risky investments. But that's something to always look at in detail because obviously cash is very important to any organization. And then following that is your capital asset footnote. And in the interest of time, I won't go over each of these footnotes unless you have any specific questions related to some of these. But as I mentioned earlier, page 41 has the detail of that lump sum number related to the transfers out, and you'll see where the money went and where the money came in. So something of interest to you there. And then page 42 is your long-term debt. So you'll see here a detail of all of your debt, all of the new debt, all of the payments, and the changes therein. And then on page 44, this is just a table of your obligations for the future. For cities, I always ask them to kind of look at this so that you can kind of plan as far as any long-term debt payments that might come due that is significant. From a cash flow perspective, you just want to keep an eye out in case you have any lump sum payments coming up that might exceed your cash holdings. Certainly you don't have that situation now, but very good information. And then you have some new capital leases and some additional disclosures. We've always had a bit of a pause on page 47 with the defined benefit plan. As you know, the pension liability is recorded on your statement of net position. This is just a detail of all the background related to how that number came about. How much is the state's portion? How much is your portion? However, I like to go and look at the required supplementary information on page 59 because it gives you some context and history. So you can see the first year we had to record that net pension liability because of GASB 68 was in 2015. You can see what the city's share of the net pension liability was back then. You see the increase in 2016, and then we're back down in 2017. If you recall, in 2016, the state did make one large lump sum payment, and it did change that liability allocation a little bit, but it's come back. Any questions about that net pension liability footnote? Okay, the rest of the footnote, rest of the financial statements are required supplementary information. We looked at the PERS, and then we've got the supplementary information. The supplementary information is just additional detail. It provides you at the fund level financial statements, your balance sheet, and your P&L. So I will flip all the way to page 128 if it's okay with everyone. 128 is a schedule of your federal expenditures. So you expended about $10 million. This exceeded the $750,000 threshold for federal single audit. And you'll see a big portion of the $10 million was related to the airport improvement, hence the large increase in capital contributions during the fiscal year 17. And then on page 29, you did expend about $3.1 million in state awards. This also exceeded the state limit for federal single audit, state single audit. Therefore, you did have both federal and state single audit. As I mentioned earlier, you received unmodified opinions, so I won't go through that again. But if you did want to look at page 138, it summarizes that we issued unmodified opinions, that we had one material weakness finding. There were no non-compliance findings, no issues with your federal awards, no issues with your state awards. Your major federal programs are listed out here. And then a detail of the finding is on page 139, but we kind of went over that. So finally, I'd just like to point out on page 143, whenever there is a finding, management is required to come up with a corrective action plan. We don't audit the corrective action plan, but it's a required schedule that needs to be uploaded to the federal data warehouse, and that corrective action plan is here for your review, and certainly has already been implemented. And that's it for the presentation. Are there any questions?
Questions or comments from the council regarding the audit presentation? I guess we do not. Is the council ready to come out of the committee on the whole? Is there a motion? Okay, I'm sorry, I didn't hear that. Okay. It's been moved and seconded that we come out of the committee on the whole. Discussion from the council? All those in favor of coming out of the committee on the whole, please say yes.
Yes.
Those opposed say no. The yeses have it, and we are out of the committee on the whole. Madam Clerk, do we have a record of items placed on the table?
Thank you, Madam Mayor. No, we don't tonight.
Okay. The next item on our agenda is another chance for audience participation. Anyone in the audience that would like to address the council on anything that's on the agenda or anything that's of interest to them, 3 minutes if you are representing yourself, 5 minutes if you're representing a group. So audience participation is now open. Okay, seeing no one come forth, I will close audience participation. Does any of the council members have comments?
Madam Mayor,
Oh, Deputy Mayor Best.
I'd like to thank the accounting firm that did the audit and also our staff. I think this is probably one of the cleanest reports that we've had come back in recent years, so kudos.
Thank you. All right, Councilman Linda Combs.
Yeah, Madam Mayor, I would second Deputy Mayor Best's remarks and include that it's in particular impressive that we've already had corrective actions and that our finance department has seen to going ahead and implementing changes so that we have smooth running and better running administration. Thanks.
Well, I'll bring it up again as I brought it up for the last few years that I would like at some point for the city of Palmer to put in for some of the municipal finance awards for the presentation of our audit. And so hopefully somebody has that on their radar screen because I think we're to that point where we could probably qualify for some of those awards, and it would be nice for the staff to be recognized in that way.
I'll second that.
Okay. Any other comments from the council? Seeing no comments, I will adjourn this meeting.